Northwest Housing. This is Rick.
Rick, this is Bill Nebbs. How are you?
Bill, I'm okay. How about yourself?
Great, great. Well, thanks for a little time with you. I guess you're getting ready to do spring break, huh?
Yeah. There's
Good feel.
a few times of the year where you can get everybody together and go do something, and
That's one of them.
This is one of them.
That's right. So are you going to the Oregon coast? Is that what you...
Yes.
Yeah, awesome.
Yeah, we're going to be over in Cannon Beach.
Oh, yeah. We've stayed there a few times. Yeah, that's Seaside. We went to Seaside right near there. Last time we went, in October. Good deal. Well, so I wanted to ask you a couple questions, if you don't mind, from a broker perspective that does mobile home lending.
Sure.
And
manufactured home lending.
Manufactured home. Thank you for clarifying. Yes, I know. Legally, it's manufactured home. Everybody says mobile home, but yeah, you're right. So how long have you been involved with this?
31 years almost.
Wow. You're probably not even that old, huh?
No. I am getting there. I am getting up there.
So now you and I have spoken before several times. You do only manufactured homes in parks, correct?
Or on rented or leased land, wherever I don't have to finance the ground. So every once in a while, somebody owns their own land and they don't want to tie it up, or they don't want to put a foundation and site improvements, septic, well, and all that, or they don't need to.
Mm-hmm.
So I could finance the house itself with a block set going out on somebody's property, as long as I'm not financing the real estate.
Okay. So, but mostly what you do is parks, correct?
Yeah.
Okay.
Yeah. Mostly.
So how does it work? What process do you need in order to do that? So say I come to you and I say, Rick, I've got this home here in this particular park and I want to get financing. What all do you need in order for that to happen?
Well, the first thing is a credit application.
Okay.
And so typically a customer will call me and I'll get their email address and email them what's called a uniform residential loan application, which you've seen, I'm sure, in real estate.
Yes.
I like that form for me because it provides me with more information, and the more information, the better in trying to get somebody qualified.
Okay. And then when we spoke to you about one that we just completed, you needed the title. And so once the person qualifies, then what's the other processes that occur?
Yeah, the first thing is getting an application and getting somebody pre-approved with one of my lenders. Now, I do not give pre-approvals based on my opinion of what I think a lender might do. That's why sometimes it may take a couple of days to get back to somebody. I get that application, go to a lender. Well, let's say they pre-approve somebody. Then it's verify employment. How do you do that? A letter from somebody's employer on their corporate letterhead stating what their job title is, what their start date was, and they are a current full-time employee if they are, or they're a current employee if they're a part-timer, signed and dated by somebody at the employer. That's verification of employment. Verification of income. If you're employed, I would need 2 most recent pay stubs. I'd need your last 2 years W-2s. And then, typically speaking, when it comes time to close, I need your most current pay stub. If you're retired, then we don't need the verification of employment letter. Of course, you have no employer. But retired people have Social Security, so I need a copy of their award/benefit letter that they got last December or January. This is a letter that's from Social Security. It says Bill, for the coming year, we're not going to give you any raise, but your gross amount is going to be X, and then we're going to take out $105 somewhere in there for Medicare, and we're going to deposit Y amount into your bank account. Pensions do the same. Well, pensions sometimes do the same things. They will have a benefit award letter when you first get signed up, That's typically what lenders like to see. Sometimes they send monthly statements. Very few do, though. Two copies of that monthly statement would work. Definitely need 2 months worth of bank statements, complete bank statements, and not printouts because they normally drop the bank name or the customer's name or both. Full bank statements are preferable to show the bank name, the customer as the account holder, and then you look to the deposits for those net amounts being deposited from pension and or Social Security or IRA or whatever in the world it might be.
Okay.
So there's verification of employment and income. Now, hopefully those same bank statements will be the VOD or verification of deposit, verification of down payment. Down payments must be source and seasoned a minimum of 30 days, sometimes 60 days. So typically I get 2 months worth of bank statements on whatever account the money is being withdrawn from for that down payment. Those are the typical requirements: verification of employment, income, and down payment.
So you say seasoned down payment, so I can't have my dad loan me 10 grand for a down payment. I've got to have it in there a certain period of time.
Loans are not allowable. Gifts are. And each lender has a different gift letter to state that dad or mom or whoever is gifting me the funds, and they are not required to pay it back.
Okay. So if I have a house and it's $70,000 and I need $10,000 down just for round numbers, I need to have a gift letter. If I don't have that much cash for a down payment or available funds, if I get it from somewhere, it has to be a gift, cannot be a loan, and I have to have a letter to that effect.
Yeah, and my lenders have their own letters.
Oh, okay.
So I would have to supply that to the borrower to then hand off to the gifter, the giftor, and whoever. And some banks are going to want 2 months worth of bank statements from the giftor to verify that that person does in fact have the money on deposit in order to gift the funds.
So they can't go get a loan, gift, quote unquote, it to me, and then I've got an obligation to pay them back. They have a check and balance for that.
Absolutely.
Cool.
Yeah, absolutely.
Okay. Good deal. All right. When you do loans in parks, is there any difference between foundation versus pads and piers?
No. Nobody cares how it's set up.
Okay, super. So it could be a modular on a foundation or a manufactured home, pads and piers, it has equal weight?
It cannot be a modular home. That is different than a manufactured home.
Ah.
Modular home is not built to a HUD building code. Modular home does not have a steel frame underneath it. So a modular home does not qualify with any of my lenders.
Ah, okay, good to know.
Only manufactured homes.
Okay, good deal. Are there stated loans allowed? Currently, I see that for investing or, kind of investing, that there's stated loans coming around again as it was back in 05, 06, 07.
And look where that got us.
Look where that got us. I know it. I'm always looking at the housing bubble news to see what they're telling us, what's happening.
Yeah.
San Francisco's already in trouble, and a lot of other big cities are getting a little nervous. But what are stated loans, stated income ever allowed, or do you have to go through the verification process that you mentioned?
My lenders follow the ability to repay rule.
Okay.
Got to document incomes.
Good deal. And there's a limit on how much debt they can have?
Yeah, typically speaking, the total debt ratio, which would be anything that's in the credit bureau, plus space rent, plus the estimated PITI payment, divided into gross monthly income, cannot exceed 43%. My lenders will also have a housing ratio. That will be the PITI payment plus the space rent divided by gross monthly income. And that cannot exceed 34% or 40%, depending on the lender that I'd be using.
So why the difference?
Good
So
question.
they could have no debt, and then their housing can't be 40%. Is that what I'm gathering from that?
They could have no debt, and then their housing ratio could not exceed 40%.
Gotcha. Okay. I see. Okay. So you take all of these formulas into account for each loan?
Yes.
Wow. Keeps you hopping, huh?
It's a lot to remember.
So what about, and I know you and I discussed one that we had come up recently for us where the appraiser didn't appraise for enough and it caused a challenge with our sale. What do you see as deals that you initially look okay and everything's moving forward and then fall out? What kind of reasons might that happen?
Well, let's address that particular problem that you had.
Okay.
The way I address things is I look to the park. If it's a small park, I'm going to stay away from my lenders with the most stringent appraisal guidelines and go with lenders that have looser appraisal guidelines, meaning they'll go further out from the existing park. But if I know the park or have had dealings in the park and somebody's got a scenario that fits for other lenders that have the more restrictive appraisal requirements, I'll go there because I know it'll work. Let's see, but I think I've lost track of my entire thought here. We were talking about that. Do deals drop out? You know, typically speaking, once I have somebody pre-approved and I get their conditions in, and I don't like to order an appraisal until I have the conditions verified, such as VOE, VOI, VOD. That way I don't order an appraisal and spend somebody's money when they aren't going to qualify. And sometimes people don't know how much money they make, especially self-employed people. Or sometimes people are trying to pull the wool over my eyes.
Mm-hmm.
So I don't like to order the appraisal until I have their conditions cleared. That way you don't have things sitting out there that could fall apart. So therefore, the answer to your question about why do things fall apart on my end, mostly it's seller pulls out or buyer pulls out for some reason.
Okay. On our appraisal, if I recall, it was 276, 278. Is that pretty typical? Or do you, is there any rough idea of the
You're
cost?
talking cost?
Yeah.
The cost in Washington is going to be $295 to $355. It's going to be one of those.
Okay. State varies.
Yeah.
Okay.
Yeah. Oregon would be the same. Idaho would be $325 to $355.
Okay. Good deal. So are there lenders that you like versus others? You mentioned some with looser guidelines if you're in a park that might be a challenge. Do you have a list? Do you
it's not
use
like there are
12
any lenders
people?
out there anymore.
Okay.
Triad is where I would go for looser appraisal requirements. And CU Factory Belt Lending has more restrictive guidelines, but sometimes they have better rates.
Okay.
That basically is it.
So
I am set up with 21st Mortgage, however, you'd have to drag me kicking and screaming to use them.
how so?
They have the first two payments are recourse to me, and I just don't want to do that. So it has to be something that makes a whole lot of sense to me before I'll even bother with that.
So recourse to you meaning?
If they defaulted on the first or second payment, they want me to pay the loan off.
And that, oh wow. And that doesn't happen with Triad and CU Factory Belt.
Only if I were to defraud them.
Okay. Wow. And did I understand when we talked before, 21st Mortgage has higher interest rates for
Much higher.
for
Much
the
higher.
purchaser?
Yeah, much higher. I typically have seen them in the past be 10 to 11%.
Wow. And if I remember right, you said the other two were, is it 5.99 to 7.25 depending on credit?
They've actually expanded their credit scores at Triad, so 5.99 to 8% now.
Mm-hmm. And what
So
kind
they're
of,
buying a little bit deeper on the credit score.
so what kind of score would 5.99 need?
That'd be 20. Oh, the score would be 720 and up, and the down payment would be 20%.
20% down. And then what about if somebody has a 640 credit score?
At a 640 credit score, it'd be anywhere from 7.25% to 8%, depending on percentage down payment. So that the best score comes with 20, the worst with 5% down.
Okay. Oh, if your credit score is worse, you put less down? Or did I mishear that?
Yeah, if your credit score is 640, your interest rate is going to depend then on your percentage of down payment.
Oh, I see. I gotcha. So if you put 5%, you're going to be in the 8% range?
Yes.
Gotcha. And then, so suppose, I know on this last one we talked about they were doing 10% down. Then your closing costs, they would have to bring to closing?
No, that depends on the lender that I use. I look at credit scores, I look at assets. If they have money to pay for closing costs outside of the loan, I may go to CU Factory Built Lending if they got a better interest rate there. If they're tight on funds and say they've got close to only having 10% down, I'd go to Triad, because with 10% down, Triad will finance my fee, their fees, and the state title transfer fee. They will finance, let's see, with 10% down, they'd finance 90% of those fees.
Okay.
So their down payment then would be 10% of the sale price plus 10% of the fees financed.
Okay.
With 5% down, no fees are ever financed. So if somebody only has 5% down, they're going to have to get the seller to pay closing costs or have a gift for closing costs, because with 5% down, no fees are ever financed.
Okay.
And then all fees have to be paid at closing. But with 10% down, you can finance a bunch of fees and get a better rate.
So what would fees be? Does it depend on the sale price of the house, or is it a flat?
Depends on the sale price, depends on the down payment. Actually, it depends on the sale price less down payment.
Okay.
And it depends on the Dodd-Frank Act, and it depends on what state we're in.
Interesting.
So I can tell you for sure that the maximum fee I would ever charge is $1,900.
Okay.
Again, that's going to depend on state and sale price less down payment.
Okay.
The Dodd-Frank Act says that, and I don't have all of that memorized. Pardon me, but
Who does?
I think if you're under $100,000 loan amount, I think it's 5% total origination fees, which would be $5,000. But I charge a maximum of $1,900. Well, the lender's going to have some fees, but never going to hit that 5%. There's too much for me to remember and or try to tell you right now.
Since you brought up Dodd-Frank, that's always a discussion that we have because of folks wanting to carry the loan themselves that sell it. So, well, let me ask you a question, sidebar on that. Do you represent lenders who do loans themselves, or do you strictly work with Triad, CU, Factory Built, 21st Mortgage? Do you ever work with an individual that has money that they want to lend?
No.
Okay.
I never do.
Okay.
I don't think that's doable because Northwest Housing Services, my company that I own with my wife, has me, Richard Boudal, as a mortgage loan originator. So I can only report to one
Gotcha.
company.
Gotcha. Okay. Good deal. Anything that I might have forgotten that you like us?
There is no prepayment penalty ever.
Okay.
I only deal with fixed rates. Although there are some adjustable rates out there, I only deal with fixed rates. All loans are fully amortized, so there's no balloon payments. There is no mortgage insurance ever on these loans.
Okay. All right.
I don't know what else I can tell you there. Oh, maximum loan term on double wides is going to be 20 years. Maximum loan term on single wides would be 15 years.
Okay. Do you have a list of, if I called you and said I have a buyer, you have a sheet that has all of the things that they need to do, verification of employment, verification of income, verification of down payment. Do you have that on checklist by chance?
I do not.
Okay.
Because every customer is different. And because customers get confused or they want to call me and tell me that this or that does not apply to them.
Oh.
I do a pre-approval letter that's customized just for them.
Okay.
Once I have a pre-approval from the lender.
Okay. So back to the lenders for a second. Triad, CU, Factory Built, 21st Mortgage. Those are the three and only the only three that you deal with at all?
So, yeah, those are the only three nationwide lenders that are left anymore.
Okay. So if I'm in Florida or Pennsylvania or North Carolina, I can call Triad or CU Factory Built and ask for a local broker because you only deal in 3 states, Idaho, Oregon, Washington, right?
Correct.
Okay.
Yes.
So somebody in Florida could call these companies, and I'm assuming they can just Google it and find their 800 number, right?
Absolutely.
And
yes,
then just
that's
ask
easy.
for a local broker.
Just ask for the sales rep in their area, and the sales rep would know who their brokers are.
Okay. All right. What about going into a mobile home lot that sells new homes? Would they have, like I know Clayton does that kind of thing. Would they have other lenders? Well, Clayton does their own, right?
Clayton does their own. They
Yeah.
have their own in-house.
Right. So that it wouldn't help if somebody couldn't find a Triad or CU Factory and Build. I mean, there's not 10 lenders out there anymore, is there, for manufactured homes?
No. I remember when I had an office job, there was probably a dozen out there. Back when I worked for the bank, Security Pacific, Bank of America, and Greenpoint Credit, at one point there were more lenders you could shake a stick at. But we went through our own mortgage meltdown in 2000. It's all pretty much closed up after then.
Right. Oh, I know one thing I didn't ask. I thought for a long time that you could only go maybe 10 years old on manufactured homes to get a loan. What if I have a 1980?
There are a lot of myths out there, and I hear that quite a bit. People will call me and tell me that they can only go back 20 years, or who knows. If it's a double wide and it's a manufactured home, which means it was produced in the factory on June 15th, 1976 or newer, and sale price less down payment does not go under $10,000, I've got funding all day long for that. Now, single wides get a little bit dicey in that one lender would say they'll only go back 15 model years, which brings us back to 2012, or Triad will say sale price less down payment cannot go under $20,000.
Okay. And depending on
there is no 10-year rule.
Okay. So 15 or 20,000, 15 years or 20,000 on single wides, depending.
Right.
And on a double wide, back to 1976, if it's not under 10,000.
That is correct. Now, it's funny, this week I've gotten a few calls from people wanting to finance 1976 homes. I said, well, is that a mobile home or a manufactured home? And they go, what's the difference? So there is a way to figure it out, but yeah, it's June 15th, 1976 is the cut line.
So the paper in the manufactured home and one of the doors in the bathroom or the breaker
Still there.
box, or-
That would tell us,
Yeah.
yes.
What about the
Or-
tag?
Or looking at the house. You'd have to look at the house.
Okay.
You know, most of these homes are rectangular, so you look at the narrower ends, one of the two narrower ends, and look for rectangular metal plates riveted into the siding. They have on them HUD numbers stamped into them to identify the house as being manufactured according to HUD code. So this is what we call the HUD tags.
Okay.
There'd be on a double wide, there'd be one on each half. On a triple wide, there'd be one on each floor. There'd be three of them. On a single wide, there's just one.
Okay. Good deal.
That would identify the house being manufactured according to a HUD building code.
Okay.
Whereas mobile homes would not have that tag, as they were not built to any building code.
Okay. Good deal. Oh, about the tags per floor, like on a double wide, you have two tags. Somebody told me, I've only seen one title to a manufactured home, but somebody said that you get a title for each side. So if you have a double wide, you have two titles. Is that correct? Because I've never seen that, and I've done them in a couple of different states. So
That is not correct
Not
in
correct.
Oregon, Washington, or Idaho,
Okay.
or Montana, or Utah, or
Arizona.
But that is correct in some states.
Oh, it is. Okay.
In some states,
All right.
not in the Northwest.
Okay. Good deal. In Arizona either, we only have one title down here.
Huh.
So.
Yeah, I just have never come across that, but I know that it exists.
Okay. Super good. All right. Well, I sure appreciate your time, Rick. And as you know, I've sent a few folks your way, and we'll continue to do that if they're in that area, and then we'll call you in our area when we can. And
Wonderful.
appreciate it, your time, and appreciate what you do. Thanks so much.
Thanks, Bill.
Okay.
care.
Have a good day.
You too. Bye.